You may learn about investing and how to make the best financial decisions for your life on Investor Facts. Make sure you click the subscription button and enable the notification bell if you haven't already. Share, like, and comment. How about if I tell you that a famous investor foresaw the financial collapse of 2008, the most current breakdown, which looks at the most recent cryptocurrency breakdown and was amongst the first to predict record high inflation, is now forecasting a stock market collapse. In the economic crisis of 2008, Michael Burry is renowned for taking a sizable short position on the housing market, which allowed him to offer his investors enormous profits while saving tons of money. Far more than I could ever thought. We're on the verge of a financial crisis. In preparation for the housing collapse, Michael Burry purchased his first credit default swaps on May 19, 2005. Deutsche Bank has purchased credit default swap for $60 million with $10 million of each 6 different bonds. According to his prophecy, corruption and greed were to blame for the gradual transformation of U.S. mortgage-backed securities, which had formerly been a reliable and reputable financial instrument, into a deadly ticking time bomb. He completed the research, studied the documents, and knew the results. Thus, in his perspective, this wager was not a bet. His problem was that the S&P 500 didn't reach its peak of 1,576 points until October 11, 2007, giving the rest of the world over 2 years to look. The S&P ended at merely 676 points on March 10, 2009, a 57 decline 1 year and a half later. From this one wager, Michael Burry generated a personal financial gain of $100 million while earning almost $700 million for his investors. Although, in the years preceding the incredible achievement, he was regularly criticized by the investment community, including his own investors. Opposition, which after everything was said and done, forced him to close his fund. Then why am I mentioning this to you right now? This occurred 15 years ago. You got it. It's happening again. Michael Burry originally forewarned of severe inflation as a result of Fed's extraordinary money printing back in February of last year. Through his tweets, he warned against inflation, using the hashtag doomed to repeat, and criticized the Federal Reserve and the U.S. government for their trillion-dollar stimulus program. He was indeed the antagonist at his level, and everything appeared to be going great. Despite the Fed's money pumping, inflation remained modest. The Fed's target inflation rate was 2.5% at the time, but the most recent public data revealed an annual average growth rate of 1.7%. So Burry was simply early. 12 months later, the current inflation rate is an explosive 8.6%. You too can become known as broken clocks if you consistently arrive 1 to 2 years early on practically everything. In a tweet from a couple of months ago, Burry obviously drew reference to Elon Musk's description of him as Burry as a broken clock. Perhaps what's really intriguing is that Michael Burry hasn't really been doing victory laps over the past few weeks. Adding that 15% below the S&P 500 low that we have seen in 2020 brings us to 1,862 points. I had to learn that one quite a few times to actually understand that phrasing. However, what he observed is the trend we've seen over the past 25 years. That's absurd since it implies that Michael Burry expects a high to low decline of 61.4%. which would return us to the historically normal Shriller PE of about 16. Michael Burry predicts that the stock market will fall another 50% or more from where it is now. This prophecy was once again criticized because it was so strong. The market has risen by 6% over the past several weeks, but as we've seen even over the past few days, quick rallies don't necessarily signal we're out of the woods. Michael Burry did tweet, quote, "Dead cat bouncers are among the most epic." In response to this possible situation, The top 12 NASDAQ one-day rallies all occurred during the 78% decline from the 2000s peak. Afterwards, those are a lot of figures to take in. Yet, what he's getting at here is that even during the terrible points of time, the stats indicate that it's actually fairly common to see strong-term recovery times among the lower-term downward trend. 9 of the top 20 S&P 500 one-day rallies occurred during the 86% drop from the 1,929 edge. All along the slope, 12 of the top 20 NASDAQ bounces took place. All along the slope, 9 of the top 20 S&P 500 bounces occurred. The NASDAQ experienced 16 bear market recoveries above 10%, averaging 22.7% before bottoming out at 78%. He noted on May 5, before bottoming out at 89% after 1,929, the Dow experienced 10 bear market rallies exceeding 10% with an average gain of 22.8%. Burry also feels convinced that the issue we're currently facing is just the beginning of a much bigger one. To support his claim, Burry also took the time to address the relatively modest trading volumes we've observed so far during the 2022 downturn. From top to bottom, Microsoft traded 5.2 times the number of outstanding shares in 2002, 3.3 times in 2009, and 0.5 times thus far, he claimed. The key point to keep in mind about Michael Burry is that he has witnessed the entire scenario repeatedly. It hurts, it's not fun, and I'm not smiling. 2008 was the second time, after the first time during the dot-com bubble. He has repeatedly observed these recurring patterns in human behavior, and he has researched the excess and greed that led to the most significant booms and collapses. I believe that this is what gives him such confidence when he discusses these subjects in his tweets. He recently discussed his chart on Twitter, and I found it to be pretty illuminating. We can observe the S&P 500's 10-year ascent to the present in white. We could see the build-up to the dot-com bubble in yellow and the build-up to the Great Depression in green. They are remarkably identical, which Michael Burry remarks, 3 times a charm. You have to admire the human condition. If not, nothing is consistent. You realize that this pattern of social behavior is familiar with him because he has seen it often and knows where it goes. He tweeted that he had just witnessed the biggest massive bubble of all time, by 2 orders of magnitude, just a year prior. Maybe it has reached its breakdown point in his view now, but of course, it's only the stock market. We must keep in mind that Burry's point of view is primarily motivated by the economy. Since we are aware of Burry's views on inflation, it is true that the Fed is raising interest rates to make it more difficult for firms to borrow money. But we need to keep in mind that increases in interest rates also have an impact on the consumer, who is the main pillar of the economy. You are aware that severe inflationary conditions result in a significant increase in interest rates. Sadly, consumers have little money to spend because paying off debt consumes a large portion of their savings and income. This typically triggers a downward spiral since lower discretionary spending results in lower sales for the businesses in which we have investments. Therefore, in a perfect world, the customer would be breaking it in. Although trillions of dollars have been dropped into consumers' laps, Burry has recently hinted that they aren't doing too well, quoting, U.S. personal savings dropped to 2013 levels, the savings rate to 2008 levels, while revolving credit card debt started growing at a record-setting pace back to pre-COVID peak. Burry is plainly concerned about the loss of funds, not just because it's encouraging consumers to use credit cards more frequently in an era of rising interest rates. To summarize, according to Burry, we have a rising annual percentage rate, rising prices, and a decline in consumer savings. As a result, firms will be less profitable which will result in the stock price re-ratings that we have witnessed so far. However, in Burr's opinion, this is just the beginning. Well, that's all we have for today. Thanks for watching the entire clip. If you like it, kindly let us know by hitting the like and subscribe buttons. Also, don't forget to enable the notification bell so you can be the first to know when we post a new video. In the following video, I'll see you. Goodbye.